Good morning and welcome to the Stock Planner channel. Today we're going to talk about BYND Meat, which is a company that makes plant-based products. Boy, he sure looks like he's enjoying that hamburger. I'm on a diet, and one of the things I can't have is bread, and so that means I can't have a hamburger. And boy, oh boy, he looks like he's enjoying that hamburger. But this is a financial channel. Let's get back to the business here. Boy, that hamburger does look good though. The Stock Planner channel is an education channel. We like to share ideas. I have a free Discord chat, and I'm using a lot of free tools. But we're not advising you of doing anything. We're advising you to learn how to do it and do it for yourself and have a lifetime of success and a couple little failures. But we're not advising or making recommendations on any one stock. BYND Meat, though, I personally am thinking about shorting it for the next 2 months. Well, let's get started. The investor relations site, BYND Meat, that hamburger does look good, and I heard the products are good. And I do see them in supermarkets, but the negative is that there's lots of competitors out there, and this company is losing. It hasn't made a profit yet. This is a daily chart of BYND Meat, and you can see it was trading up around $2.19 at one time. And now it's trading at $1.12. That's 50% of its value. It's lost 50% of its value since January. That's not a trend that we want to see. And we're going to see here in a minute that its future growth rates are starting to dim. And then the company gross margins are taking a hit too. This is not a company that's doing really, really well. And while it's near its support level, I feel it's going to hit a lot of headwinds. Let's dive a little deeper into this. Going into Finviz, oh my goodness, that was yesterday. 2% drop. That's nothing. Look at all that red. Oh my God, that's a line you don't like to see. Target price is 118. It's a little higher than it is today. Not profitable. It is optionable, and that's probably what we're going to do today. And it does not have a buy rating. Lots of people like to trade this. Recent downgrade by Piper. 95. I believe that. Finviz, free tool. I always start my day out with Finviz. The next tool I like to use is TipRanks. It's free as well, and it has a paid version. I like free. BYND is trading at 112. The analysts, there's 7 of them, are saying it's going to trade at 108. That's down. Moderate sell. Number 1 means bad. Number 10 is good. Hedge funds decrease. This is all red here. Technicals don't look good, and the fundamentals don't look good. And there's another look at it, a different version of the chart. The next earnings date is October 31st. Simply Wall Street is another tool. It's not free. To get really anything out of it, you have to pay around $10 or $15. But I like it because of the graphics. And the health of the companies, they're saying, is okay. And the future looks bright for it. But right now there's no value, and there's not paying a dividend, and it has really a lot of past history. It's just, and you want this is snowflake. You want it to be really kind of green like this one and this one. So if you wanted a company that's doing well and strong, you would look at these companies, and then you would look at undervalued to see what the valuation is of BYND. Well, these are all red X's, and they're using the PE ratio. Says it's below its fair value. Future growth, that line looks good. Revenues look good, and the earnings, well, that's a little flat there compared to this. And many analysts are looking at this margin. Earnings are forecasted to grow to 70%. And well, if you were looking for a company that performs well, has some past history, that might perform well in an inflationary trend cycle like we're in, or we might go into some kind of recession, I would look at these 2 companies first. So these 3 companies, they have a history. Back to the chart. We see a downward trend. Scroll out. Trading view. Charting package. Free. My MACD has got a green dot there. It says it's going to go up. But it is at the 0 line. It's at the 0 line. Stochastic RSI pointing up, and so is the RSI. That would normally mean go up, since the zigzag is not sure of itself at the moment. Looking purely on technicals, you take a long long position, but I'd like to find a trade if it could stay below this for the next 2 months, about 112. This is where I think it's going to be. It's not going to grow that much in price. Since we want to be short, we select bear call spread from its various different options, and we type in Beyond Meat, and we go out to December. And we want our break even to be below 112. So we then move this stuff up. If we move this short strike below where it's trading at, if it stays below 114 and you have $1,000, let's move this down to 500. Yeah, 112. There you go. As long as it stays below 112, we are going to have $233 credit. Okay. So I back tested several stocks. Once I get a single based on the RSI and the MACD, it has about a 70% chance of reaching an 8% target. This is one of those stocks. 8% here is the range on this chart, and 8% target price is 103. And a 3% stop loss is 115. So we can play the game as long as it stays below 115. Get a little antsy back here, but still hanging in this red territory. You might want to close that out. But if it's staying down here, you may want to play this all the way to the end. But if it hits 103 and below, you might want to think about getting out at your target. To do this trade, you need $500. Now, to buy this stock or short it, you would need $11,000. And $500 is a lot different. And this is almost a 1-for-1. So it's almost like buying it, but for less money. Takes the risk off. In reality, if this stock stays below 112, we have a winner on our hands. 112 is what we said when we were looking at the chart. Let's take a look at that chart again. Here's 112. This is about 118. So 115 is right here. Get concerned if it jumps above this. Be upset. But if as long as it's playing down here, which I think it will, for the next 2 months, I think Beyond Meat's going to be sluggish. Hit some headwinds. We have a winner on our hands. We went up to $200 or more by trading options. So in conclusion, I'm shorting. I've used several tools. TradingView, this is it. It's free. I've liked to use TradingView for my technical analysis. I used Finviz, TipRanks, and Simply Wall Street for my fundamentals. I need to know something about the stock and what is happening out there. And I've used OptionStrat, a simulator, to plan out my trade and help me with my profit targets and my stop loss. By the way, the profit target was 103, somewhere right in here. And you definitely can get that. So you must ask yourself, is it going up here or is it coming down here? That's the question. Charts and lines and analyst opinions are not all, you have to make your own decision. Do your own due diligence and make your own decisions. What do you think of this trade? Put your comments below. Please like and subscribe to this video. My trading has gotten better since I've been discussing it with you guys. Catch you on the flip. Happy trading today.